Hello everybody, hope that you are very well and welcome to this evening's Contenders live stream where I have a very good one for you today. I'm going to be starting off with Ethereum chart of the week, which has been insane. Ethereum has just not stopped going up. So I'm going to be covering Ethereum, and I'll also explain how I'm still on it. Okay, and then I want to actually go over a trade that I took today, just because it's you hopefully can learn from it, because it was a really nice trade, if I'm honest. So I will cover that briefly before I get into the main subject of today, which is open interest and funding. And obviously it's quite a big topic to cover in one video. But I'm going to try and do it basically. So yeah, it is a large topic though. Open interest and funding. Well, funding not so much. It's a bit not as big, but open interest obviously really big topic. But yeah, that's what I'm going to be covering today. It's probably one of the most asked questions that I receive about funding or open interest, so I get asked daily about them both. So hopefully this video will answer basically the questions that I receive a lot, and put everything into a video. So yeah, I hope that you find this one very useful indeed. So it will be Ethereum chart of the week, then I'll cover my Bitcoin trade from today, or there was a few Bitcoin trades but all in one sort of pattern, and then ending well, the main subject will be then open interest and funding, covering all that. Okay, so I hope that you thoroughly enjoy this one, and let me just hello everybody. Yes, it's good to have you all here tonight. It's going to be a really good stream, and obviously at the moment it's just enjoyable period to be trading. It's always enjoyable per se. I say when everything's just going up, and it's kind of like a mini alt season where the alts are just like on fire. Okay, they really are. I'll explain this as I go through, but yeah, let's just say it's enjoyable when the alts are on fire, because it's pretty easy to make money. I mean, to be honest, anyone can really make money in a bull market. It's not overly hard. So yeah, it's obviously nice to just have easy money, I suppose. It doesn't happen all the time. So yeah, let's go over just a starting disclaimer. So please pause and read this. This covers everything that I cover tonight. Okay, so make sure you pause and read this before we begin. And I'm going to be beginning with Ethereum chart of the week. So as you all know, that this has flown past target, by the way, absolutely flown past. I was looking for the top of the channel, and we'll cover what's happened in a second. But basically, it was a long entry off of the swing failure pattern, aggressive, as alts are doing well, as they have been now for a few weeks. Okay, the alts are literally on fire. Okay, so it was very much a short-term trade for me, offered a swing failure pattern up to the top of the channel. Invalidation is literally the low of the wick, because if it's a swing failure pattern, you shouldn't then hit the low of the wick, and targeting the top of the channel. And it basically played out like this, where this was the entry. Okay, this was the entry for me after the swing failure pattern, and obviously then price moved up. We actually did, funnily enough, wick back into this area before taking off, and you can see here you got a slight reaction at the top of the channel. So you did hit the top of the channel and retrace. Okay, and then after retracing a little bit, you kind of reclaim the channel here and then move up again. And actually what, funny enough, we have moved up again. So I have re-entered into ETH since here, but I did close totally out of the trade at the highs, and then it like exceeded expectations with another move up, and I traded it again off of this bull flag. So yeah, I missed out on this section, but this is the thing for me, like I literally don't care if I miss out on a little bit of a move, because yeah, that's just not a kind of trade that I'm never going to get annoyed by missing an altcoin, to be honest with you. Especially if it's in tangent with Bitcoin moving up, where I'm making money off of that anyway. So for me, I literally couldn't care. But I know some traders get really annoyed if they sell too early. But yeah, personally, I never do. But yeah, let's go through Ethereum, because it's obviously a pretty amazing place right now. So this is obviously where I was trading. Often this was the swing failure pattern, by the way. So I'll just zoom in and show you this really clearly. So that was obviously the low, and then we had 2 days. Okay, so it was just over 2 days, actually, I believe, if I remember correctly. So yeah, about 2 days, 6 hours of like sideways range. Okay, we have that sideways range coming down, almost in like a falling wedge type pattern. Okay. So yeah, basically coming down like that with, you can see here, you can see here, what I tried to highlight is massive bullish divergences. So this is where they are pretty helpful, because you get massive divergences like that. It's really big divergences, on top of the fact that you swing failure pattern the low. It's like a pretty safe trade, to be honest. In what we are in, I would claim that it's a I don't want to put a name to it, but some form of very positive expectancy returns for the alts. Let's just put it like that. So when alts are like this, you can be much more aggressive on them. You really, really can, because yeah, you just can. So yeah, basically we swing failure pattern that low, and this was my entry. I entered in a little bit afterwards. Okay, so my entry was not actually to swing failure because I kind of missed it. But then I got in. I think it was on this. I can't remember the exact entry. It must have been around here. Was around here. Okay, so I basically saw the swing failure and entered around this time. I think it was this period here. Okay, and then it moved up again slightly, which was nice, and then in the end we got this another drop down, which was for me absolutely fine. But even here you can see where it was almost okay a swing failure of these lows. Okay, so this series of lows, taken the lows, and again just straight up pump, just searching for the liquidity really, before you bring yourself up to the top of the channel. You can see here it didn't last very long, but you come up to the top of the channel, you get a pullback, you then come up, you retest the top of the channel, test it. Clearly there's big demand on this altcoin, and I'm not surprised because Ethereum has a lot of space to run. Before we grind up again. No retraces on these moves. You see how there's no real retraces before you get another bull flag and up again. So we're currently pulling back a little bit now, if I'm honest. We are pulling back slightly. It's hardly pulling back, if we're honest. We're just range bound again. So it's just like consolidation, move up, consolidation, move up. Okay, so this is where if you're waiting for lower entries, okay, so if you're waiting for this entry, you just might not get it, okay, because we can see there range, move up. So do we range again before another move up? It's just something to bear in mind. Obviously, just off of that last move, because here, you can see here, this was basically from the first low made. It was a swing failure of the low, but you haven't really got a big pullback on Ethereum for quite a long time. Okay, so the last time you really got a pullback, we have to zoom out quite far, because this isn't even really a big pullback. It hasn't had a big pullback for a long time, basically. It's a very upward sloping consolidation. All I would say that so we don't want to time the highs, that's the worst. You don't want to do that. So you don't want to short Ethereum. But all we can say is it's likely that when Ethereum does pull back, you can see like a heavy pullback. Okay, so it will likely be a heavy and quick pullback when it does happen. But there's no, you're gonna make more money, keep either trading stop losses, buying the bull flags, okay, until it will reach a point where it's going to tumble down hard. But there's no point in trying to time that high, because just keep following this trend. Don't fight it, okay, just play along with it. And it's there's a lot of money to be made on the alts, to be honest. Yeah, so my favorite alt today was actually Cardano. I traded this very, very, very well indeed. This one basically backtested weekly, and we saw an extreme move to the upside. So I'm very, very pleased with Cardano actually. And again, that one's looking really nice. But anyway, yeah, so that's Ethereum really. I do think that this is, when we just look at this on the daily. Okay, so if we look at this on the daily, it's as if it's just got a lot of potential. Okay, so even up to your next high, I think this is about 25-30%. So yeah, the majors. Okay, so we look at the majors and see how they're doing. And as I've said many times, when the majors are doing well, and for me that's Litecoin and Ethereum. When Litecoin and Ethereum are doing well, you can expect the rest of the altcoins to do well, okay? So you really focus on those two alts, and if those two alts are showing strength, the rest of the altcoin market is generally going to be showing strength, and that is definitely the case, okay? So we've seen Ethereum move really, really, really healthily, and you're seeing alts pop off all over the place, as well as Litecoin has also been pretty steady moving up as well in that regard. So obviously Ethereum much better, but nevertheless, Ethereum is the coin which leads the altcoin market. So yeah, if this continues to show strength, the altcoins really should have a party. Cool. So that's what I wanted to explain to you all on Ethereum, okay? And then I just want to run you through this Bitcoin trade, just because I guess I think that you can learn a lot from it, because it was just such a nice trade. So this was a series of 1, 2, 3, 4 trades, okay? So 4 trades today. Yeah, and I must say they've gone very, very nice indeed. So the first one, okay, so the first one I took was obviously this morning. So if you've watched the members update that I gave, what was it? This must have been about 10 hours ago or something. So if you watched my update in this morning, okay, or if you were around in the chat 12 hours ago, I was first of all waiting for the swing failure pattern of this high, okay, because I was feeling that we would get the swing failure pattern. Obviously, the funding had somewhat to do with it. The funding, the reason we were on a crowded long, it just felt like, a really crowded trade with the liquidity to be taken to the upside. So I was waiting for this swing failure pattern to happen, okay, and I shorted it just as it come down through the high. So it was an okay trade in the end. It wasn't nothing to shout home about, but it was an okay short because obviously I made profits, so that's the main thing. So basically what happened on this trade was shorted it around here as it come back below the highs. I had a little bit of drawdown, but ultimately it did come down to around the lows of the range. And at the lows of the range here, I did not close out the short because I was either waiting for a swing failure of the low or to come back into old consolidation, or alternatively give me a reason to close out the short. And it did give me a reason to close out the short. This is where I made a little bit of profits, but only little because I didn't get my targets. Okay, but this is where you can be quote unquote wrong and still make money. Because here we were shorting, here we had the lows, and then this is where I closed out at 10.32. Closed out at that Bitcoin short, and I was looking to long. And for me, the long entry was really, really, really nice. As you all know, this is the channel that I had on this morning, and it was, yeah, it's gone perfectly, basically. So I got in off of, this is where I was closing out at a short. And on the long, I got in on this resistance support flip. Very, very simple indeed. So the old area of resistance flipped to support, and that was my long entry. Okay, and I traded that long up to, if you watched carefully in the video this morning, I said the 786. That's where I'm looking for, the 786. And after closing that long and closing the short and getting into a long, I did trade this up to the 786. So this was obviously the back test. Oh yeah, so that resistance support was also the middle of the channel at the time of the channel that I had on. So that was also a factor in my decision making, but you can see here the resistance support on that channel I had at the time, but we came up to the 786 resistance, and this for me was the resistance, for me the biggest resistance, because as I mentioned in the video this morning, the 786 is coming into play more because we're stronger. Okay, so we have to recognize strength and we have to adapt. Okay, there's no point in just you have to adapt to the market as it's moving, and because the market is really strong at the moment, prices pushing through the 618 fairly easy. You know, we're not really getting rejected from it. We are for some trades, but more often it's coming to the 786. That is a sign of strength, and we must adapt. Because you'll make more money if you adapt and not just get stuck in your ways. So yeah, the 786 is what I highlighted this morning because of the fact we are seeing stronger moves. But yes, I did enter into this short position off of the 786 or just below. Okay, so basically we saw the wick onto the 786. Okay, and then I basically shorted the next partial rise with my invalidation. My stop loss was literally just $1 above the 786 because I just felt that was going to hold, or we were moving on to new highs again. And I guess thankfully or whatever, yeah, the 786 did hold. But this is what I loved. I was straight away identifying the butterfly pattern, and this is why I was so careful with my short position. So I managed to get into this short knowing that the invalidation for this butterfly pattern was literally $1 above the high. Okay, so I could enter into a very, in my opinion, a very safe short position. E.g., I can add on a lot of size onto the position and increase my risk percentage because I have a very, very defined risk. I know exactly where my risk is. Okay, and it's literally $1 above that high. Actually, no, I lie. I put it $3 above the high. I did put it $3 above the high, and that is because I placed it at 10,451. I wanted to go slightly above the 50 psychological level. So I did place it actually $3 above the high. Because I can remember I placed it 10,451. So it was slightly above the high. But basically, I had a very, very, very defined risk, and a pattern that I'm playing. After seeing the wick above, I just felt was a really, safe short. Okay, I did feel it was a good short, and I was targeting down towards the lows. Okay, at the time, I was just into the short. And then basically I wanted to see the reaction of this lows. If we had a reaction, I was going to close my short and enter a long. And what did we get? We got the reaction I was looking for, where I literally closed out of the short. Okay, and this was me taking profits on the short, and then I entered into a long position. So I went straight. This is literally, I don't think you can find much better trades than this in a day, because it was literally so perfect. So I went straight out of that short position and then took a long position, obviously looking for the lows of C. Okay, and that was actually off the middle of the channel here. Okay, so obviously I started the day shorting this. Okay, shorted this, and then played that down for a little bit of profits here. Nothing major, but still it was pretty nice. And then from this short, closed out of that short, went into a long here, traded up to the 786. From up here, I traded a short down to here, where I closed out of the short for profits and entered into a long position. Okay, and from this long position, as you all will know, we shot straight up to the top of the channel. Okay, and you might be able to follow it along in here. I remember posting it. Yeah, there we go. So basically, I was like, yeah, I'm going to go out for a little bit. And before I even managed to get out, we came straight up and hit my take profit one, which was the top of the channel. Okay, so it hit my take profit one, and then from that take profit one, we did actually get another decline. Okay, but this is still a valid butterfly harmonic because the butterfly can come down to the 886, by the way. So yeah, this is 100% still a valid harmonic. The reason why I was a little bit more aggressive is obviously because we've done the swing failure pattern of this low here as well, by the way. So we did swing failure that low before coming back up to the top of the channel, before coming back down to the 886 here, before getting another rise. And this is the thing, although I'm trading still off of this harmonic pattern, this is why I take profits at the top of the range, because ultimately we are range bound, okay, and we can definitely still remain range bound. There's no indication that we are definitely going to, there's no indication that we are going to be breaking up, and actually this plays out, and that's why taking the profits at the top of the channel is really, 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 really important, because you trade it as a range until it's not range bound, really, okay. Yeah. So yeah, I just wanted to go through that trade today because I felt it was just so nice trade to talk you through. The way that I literally 4 trades, and although I guess it was really 3 trades were wins, and 1 I suppose is classed as a loss. This short I suppose I class as a loss, but it made me money, so I don't know whether it really classed as a loss, but nevertheless it was a good day of trading. And to recognize these patterns early really, 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 really do pay off. So yeah, I hope that you enjoyed me talking you through that one. So yeah, there we go. No, so even on the lower term timeframes, I'll take that question, Chris. So even on the lower term timeframes, I still do at the very least, I want to see 2 levels of confluence. Okay, so I'd always want to see two factors lining up together. Never trade off of one thing alone. That's not a good idea. So you always want to see 2 factors line up. Yeah. So with that said, let's move on to open interest and funding. Obviously, a very enjoyable topic, because I feel that when you understand open interest, you have such an advantage, because I truly believe that the amount of people that really know how to use it correctly when making trading decisions is very low in this market. Okay, so if you go across to the stock market, obviously I would say the stock market has a higher level of traders. I must admit, I do feel, I think everyone would probably agree with me, but I feel that the stock market has a much higher entry barrier. Okay, so if you trade in the stock market, it's everybody is on a higher playing ground. Let's say everyone has relatively similar knowledge, whereas in the cryptocurrency market, I feel that just such an advantage, because you're literally trading against people that have much less of an idea. Okay, that's my opinion, but yeah, so in cryptocurrency, people really, I feel, are not very clued up about these type of things, okay? So open interest is really, 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 really helpful, okay? It's really, really helpful. So yeah, to understand this fully, open interest is like a must. It really is a must. Funding is just helpful, but open interest is a must. So basically, I want to start with open interest. So open interest is an extremely useful statistic to follow when trading a macro trend. It can be used to identify how healthy, and I've put this in brackets, but how healthy an uptrend is, okay, or just a trend, so a downtrend or an uptrend. Okay, and you can also use this to identify sideways patterns and getting ideas of how a sideways range is going to break. So you can literally be using open interest all the time. So you can use it to pick up on patterns. So this is one thing. I've got a document in a second that I'm going to go through, but just to make you aware that there are certain patterns that one could pick up on while trading with open interest. I'm not recommended, but just for an example that I could think of at the top of my head with this one that was nice was, for example, when Bitcoin used to fall in price as soon as 1 billion open interest was hit. Okay, so if you remember, 6 months ago, while we were in the descending triangle, every time Bitcoin hit 1 billion, it dumped heavy. It hit 1 billion, it dumped heavy. It hit 1 billion, it dumped heavy. And that was like a cap. It could not get over that 1 billion open interest. But this is now no longer the case. And this is where you have to, again, like recognize patterns, because, 6 months ago, that was a good pattern to essentially use as confluence. But, now it is no longer the case. We have safely broken 1 billion and it seems pretty stable above it. Okay, that can obviously change. But right now, yeah, it's not a trading metric anymore, because the pattern is definitely no longer effective. But just picking up on things like that is can be helpful. And the funding, I've made a note of funding here. Funding is an important fee. Okay, so obviously you're paying or receiving funding, and I'll explain that in a second. But understanding how it can influence price. Okay, for example, when Bitcoin was in its 10K descending triangle, just as it was back here. Okay, when it was in its 10K descending triangle, funding majorly affected the breakdown, and I'm going to explain the difference of why. Please don't let me forget. I can't remember whether I made a slide, but I don't want to forget this. The difference. I'm sure I won't forget it, but the difference of funding now, funding is high now, but there is a difference of funding being high now and funding being high when we were in the 10K, basically back in June, okay? June, July, August. So there's a big difference between the fund, the funding levels are exactly the same, but there is a big difference between then and now, and this is where context is so important in trading. You cannot just look at statistics, okay? You cannot just look at even patterns. You cannot take a pattern and say, this is the pattern I'm trading from. Every single trade is different, hence why you cannot just trade off of a pattern. Bull flags, context is really important of whether a bull flag is going to trade out or not. A context is really important of whether a triangle is going to play out or not. Okay, so this is why you cannot just trade off of a pattern and think a pattern's going to work. For example, you cannot just trade off of a statistic and think it's going to work, because each one is coming from a different context. How is the market, just how is the market in general? That is a context. What is the market like? Is it bullish? Is it bearish? What's the volume like? There's so many different factors you have to come together with, and that is why you cannot just That's why, literally, people will lose money when they pick up a textbook and trade from the textbook, because the textbook is going to tell you price moves up, it comes down in a bull flag, and it moves up again. But they will not, that's not going to win you money in the long term, okay? Because more times than not, it probably fails. And that is because you need to actually take really into account the context of the trade, because every setup is going to be unique. Just remember, every setup is unique, and the context of each trade and how price is approaching levels are really, really, really important. So yeah, I want to go through those two scenarios basically and and give you a thorough breakdown of the 10K descending triangle and the what we're in now, basically same funding rates but different context. So I will explain that. I'm going to take all questions at the end, so yeah, don't worry. So yeah, moving on. Open interest. So many of you will probably have seen this cheat sheet that I have made, because I put this cheat sheet out probably a few months ago, but then I never got around to actually making a video for it. So you probably will recognize this cheat sheet that I made, because it's been floating around for quite a while now. But nevertheless, this is the video to go with it. So yeah, basically, I've got to, just so you're aware, I have listed the websites in the next slide where you can get this information from. Okay, so do not worry about that. But basically, what you want to see is for a healthy trend. Okay, so open interest is really monitoring how healthy a trend is, and I use the words like healthy. Okay, so what you want to see, okay, and this data is relatively easy to follow, like when you know where to go, sort of thing. It's pretty simple to recognize. Okay, so what you want to see, and apologies for the people that already know this because they read the cheat sheet, but basically what you want to see is price rising, volume increasing, and open interest increasing. So the market that we're in at the moment, arguably in my opinion, it's a bull market. Okay, so what we want to see to maintain this bias of, let's say my bias is bullish, but for me to maintain a bullish bias, I need to see volume increase on moves up and open interest increase on moves up. If we start continuing to move up, but for example, we move up on lesser volume, open interest declines, I would say to myself, I really need to start questioning my bullish bias, because this uptrend is no longer healthy. Thus far, the actual rise in price has been backed by a rise in open interest and a rise in volume. So this is an extremely healthy bull market. The period that we are in at the moment, let's not go bull market, bear market sort of talking, but let's just say what we've done thus far, okay, over the last few months has been extremely healthy, because we have seen price rising, volume rising, and open interest rising. Okay, so this is a strong uptrend and very bullish, and it's impossible to deny this. It's literally impossible to deny this. You're going to get bears coming out, for example, or just people with a bearish bias that are very misinformed, thinking that this is going to be top, this is going to be top, this is going to be the top, this is going to be top. But really, it's impossible to deny the fact that this recent uptrend has been extremely bullish, because it has met the criteria to have a very strong uptrend. That's why you can have confidence on buying these pullbacks. As you know, I did that. Well, I bought that pullback 9,700, and then one day later we hit 10,500. So yeah. So this is now where you can see when it's decreasing. Okay, so if, for example, we start rising in price, so let's say we reach up to 11k. Okay, so let's say 10,700 next level, I suppose. So let's say we hit 10,700. Okay, and this rise in price comes on decreasing volume and a decrease in open interest. That basically shows that the uptrend has weakened and it's slightly bearish. And a brilliant example, I suppose, really brilliant example that I can give you all, was this rise. As you all know, this rise was a new high made in price. Okay, so we made a new high in price, but this was the first time the rise in price came with a decrease in volume. Okay, so we moved up a level and the volume had tapered off, so the volume was a lot less and the open interest was decreasing. And that was, as you know, on the Champions live stream, I said that this is a bearish signal, because we have we've made a new high and the volume has decreased. That is like a bearish sign. Okay, and as you all know, that did get a pullback. Okay, so like, it's using these little things that can give you this sort of edge, and that's why I was not comfortable buying here, because I did feel we could get this retrace. And obviously we did, and using volume metrics and open interest and definitely aid in that decision making. So next is coming to when we're in a bear market, so coming down. So if price is going down and volume is increasing, so you're seeing price coming down and bear sell volume is increasing, okay, as well as open interest increasing. So you're seeing the volume, the bearish volume, so the red candle bars, and open interest increasing as price is going down. That is showing you a strong downtrend. So what this means, by the way, I have got this on the next slide, I believe, but this just shows you that when volume is increasing and open interest is increasing, that shows new contracts opening. So for example here, when price is rising, volume is increasing, and open interest is increasing, that shows you new money coming in, essentially, or new longs opening. Okay, so new money, more money coming to the market, and that is in the form of new longs opening. Okay, whereas this, what we had like a few days ago, was price rose in price. Okay, so the price made a new high, but the volume was lower, okay, and also open interest decreased. So that shows you that it's more positions covering, okay, so it's more shorts closing out, for example. Either shorts getting liquidated, obviously a short getting liquidated is a market buy, or just shorts just deciding to close out their position, for example, and that pushes you up higher, because for a short to close they have to buy. And so that is a bearish sign, because the move up has been fueled by people closing positions rather than new contracts opening and new longs opening. And that's what you want. You want the move to be moving up with new contracts opening, because it all comes down at the end of the day of like thinking of the market as some sort of what's a good analogy of this, the market to be moving up. Well, people are still interested. Okay, so you know, if you are at 9,700 and the demand is really strong, you're seeing a really big buying interest. But if you then go to 10,000, okay, and at 10,000 that move was only fueled by people closing out of positions, what that's going to show you is that we've reached a new high in price, but people aren't actually interested in buying there. The move up was fueled by people closing positions rather than opening new positions. And if you move up to a price where we've got to that price because through closing of positions, then nobody is interested at opening these positions. Hence you will pull back to a place where the demand was strong. Okay, so just coming to the chart again, so you move up here off of, let's just say we moved up on what we did, so we moved up on a decrease in volume, open interest declining. This move was not fueled by people opening new contracts, so we come up to a new high, which was obviously a big level because it was around 10k. So you broke 10k, but people were not interested in buying here, because I guess they were saying, we were sat at 9,700 a few days ago. We've now just hit 10k. I'm not comfortable buying here. Okay, or they were saying this move was fueled by people getting liquidated rather than new contracts. So what you do is you drop down to where the demand was prior, okay? And then what did we get here? We actually got really big signs of demand where we got the rounded bottom. And as you know, this website that I'm loving at the moment, you got the you got the rounded bottom, and as I've shown you all this, you got the very big bullish divergences on the CVD here. Okay, so rounded bottom and very, 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 very big bullish divergences here on the CVD. So that shows you massive, massive selling coming in, and people hold, bigger traders holding this up with limit orders. So that was like one sign that was really nice. But basically, when you think of it like in an open interest level, that this is just coming back to old demand. People are interested in buying here, and that's why you got the move back up, because there now are there's now people interested in buying back at these levels. And although this move was kind of fueled on a liquidation run again, but you basically just got a big short squeeze here. So you did get a big short squeeze here. But nevertheless, it come from the way, this is where context is important. This one was not as important than this, because this was fueled by a big, real big selling at the lows. So it's natural to get a short squeeze off of that, if that makes sense. It's really normal to short squeeze off of this, off of what happened here. The way that you come back down into support, heavy selling at the lows, that's what you want. You need that to happen to force and move back up. So again, like this move was on decreasing open interest, and so was this one, but the context of how you got from here to here and how you got from here to here are really, really different. This happened off of a drop and a squeeze, whereas this was just upward sloping consolidation. Okay, so you see how this was just upward sloping consolidation, whereas this move come off of the back of a short squeeze. So the context is really, 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 really different. Hence why you cannot just think here arguably I mean I didn't take a short up here, so. But, arguably you could have said, on this move here, as soon as you hit 10,108, you're going to be like, right, I'm going to short here because this move was on a decrease on open interest, for example. It would have played out. But then if you do the same again and don't think of any context, you have no, you just short here again, then obviously you lose the trade. And that's why context is very important. How did you get there? Why did you get there? Okay. So I hope that makes sense. And then finally, if you start, so bear market, you start decreasing, you're continuing the bear market down, but the volume is becoming less and less on each move down, and the open interest is decreasing. That's showing you that the downtrend is weakened and it's becoming more bullish. There's not people interested in selling at these levels. And obviously, if you don't have people interested in selling at these levels, that's where you're going to round out with a rounded bottom, because heavy selling, you come down so low, people are thinking, this is not a good value to sell. We were sat at $10 a week ago. Now we're sat at $5. Who's going to be selling there? Generally there's not going to be many people selling, and that's where you get a rounded bottom. And as people start to think, okay, people are no longer interested in selling, this is arguably a good value to at least trade it up to $7.50, and that's where you will get that rise back up. Okay, and then you could see it at $7.50. Okay, now how have we got back up to this level? Okay, and that's where you can start to look at volume and open interest to make an informed decision, as well as other factors, obviously, but very helpful. So if volume and open interest are both increasing, then the current price trend will probably continue in its present direction. If, however, volume and open interest are declining, the action can be viewed as exhausted, and the current price trend may be nearing an end. Okay, I will cover all the questions at the end. Okay, so this is just 4 steps basically to explain that. So with price moving up in an uptrend and total open interest increasing, this shows that new money is coming into the market, which is considered bullish, and that's obviously considered new money coming in the form of new longs. So basically this first step is bullish for that reason. So if prices are rising and open interest declines, the movement up is likely to be caused by shorts covering, and that just means shorts closing, okay, and money is leaving rather than entering the market. Once shorts stop covering, the trend is likely to reverse back down, and it doesn't mean you have to fully reverse the trend, but it just means you're likely to reverse back to where old demand was, okay. And just really, really nice that I have these examples, okay, because this is literally what's happening right now. So you don't just expect, just because that happens, you don't think the whole trend is going to reverse. You just think you're going to come back to an old area of demand, and that's really nice. These channels are like demand areas, okay, so we can view this consolidation as it's like an auction process, okay. You reach the top of the range, people are like, this is not a good value because it's the top of the range, okay. So you could say at here you have a lot of supply. At the lows, I mean, it's really clear, at the lows there's demand. Why is it so clear? Because we're making higher lows. So price is not even reaching new lows before people are stepping in and buying, potentially stepping in and buying. Okay, so that's really clear case of demand. Okay, so eventually you cannot keep making higher lows, and you are more likely to break up. Okay, so yeah, that's a lovely example of like just declining back to where old demand was. Okay. And on the flip side, if price is in a downtrend and open interest is rising, that shows that new money is coming into the market with aggressive short selling, which is considered bearish. Okay, and finally, if total open interest is declining along with declining prices, this is considered bullish, or at least a reversal back to previous supply. Okay, so I hope that makes full sense. And I would like to show you the website that I really am enjoying using, and this is Trading Light. I'm really sorry, by the way, that I keep on like giving you different websites, because I'm aware that they all cost money. But I really like this one now, basically. I love this one because I feel that the open interest has a really, really, really nice graph. It's really, really simple. I do think you can get a trial for this website, and I think it's free, but you have to like be invited by them or something. I don't know. Yeah. I'm actually paying for this right now because I had a trial and my trial ran out, and I was more than happy to pay because I feel it's a really good website. So yeah, so you can use open interest. You can see open interest really, really clearly here, and also one of my favorite indicators, the CVD. It's a really helpful indicator. So yeah, these two factors alone make this website worth it. But yes, there are a few other websites that you can see. You can see it on Tensor Charts. Tensor Charts is free. Okay, so you can use Tensor Charts for free if you want to. Okay, so here on Tensor Charts, you just come across to BitMEX stats, and you'll be able to see open interest here. And this is free. So yeah, if you don't want to pay for it, then just use this website. Also, you can use websites like SKU, SK3W. That's also free. Or you can literally just track it yourself on BitMEX. So you can also just come across the BitMEX, and open interest is recorded here. So you can see 1 billion, hover over my mouse and it disappears. I guess I can do this. Thinking about it. I can do this. So this is the open interest currently. So you can track it manually yourself, which is like, I do manually track it myself because I like to record what it is at the start of every morning. And obviously you can do that by just loading up the website and check, but I myself like to record it. But yeah, you can just check it manually, on BitMEX itself as well. Or other exchanges should have this similar. Okay, so imagine Bybit will also explain that to you. But I don't trade on Bybit, so I don't really know. But yes, so that's where you can actually view that. Okay. So moving on to funding, and I'm going to go through examples on the chart. So I'll give you some examples and take all your questions once I've finished with the funding explanation. Okay, because we can go more in depth on open interest. Definitely, we can go more in depth. So let me cover funding first. Okay, so the funding rate. Okay, so funding is really interesting in crypto because it does, in my opinion, have an effect on price. Okay, so obviously I imagine the majority here, and I'm just speaking on my personal opinion, but I do think it's common knowledge and feelings that the perpetual swaps on BitMEX, okay, they are the most highly traded contracts in terms of volume. Okay, so BitMEX has the highest volume, and the highest volume comes under their perpetual swaps. Okay, be it the Ethereum, XRP, or Bitcoin pairs. Specifically, the Bitcoin pair is where all the volume is in crypto. Hence why I love trading it. But yeah, the perpetual swaps obviously don't have an expiry date, and that's what sets them apart from a standard futures contract. Okay, so because the perpetual swaps have no expiry date, there needs to be some way to keep price in tune with the spot price. Okay. So I put this in brackets needs, because obviously it doesn't need to be, but there's an interest from the exchange's part, or there's an interest of keeping the exchange price of a leveraged contract similar to the spot price, the underlying sort of oracle that it's attached to. So price doesn't really need to, but people have an interest to get the price to stay near the spot price. So when it starts to reach extreme differences to the spot to leverage price, funding is used to make traders want to open or close positions. So, for example, if we load up BitMEX, because the funding just got paid, what, like 11 minutes ago, so that's probably why we saw this increase in price, if I'm honest. So you can see this is I'm just going to have so many examples today, literally so many examples. This is a brilliant one. Okay, so yeah, look at that. Literally, this was a brilliant example that I have for you. Price decreased. Literally, there's no other explanation for this. Price decreased. We had an extremely high funding rate. This funding rate was 0.1. Okay, so it's come down now. It almost halved. Funding was 0.1, which is extremely high. Okay, so people are opening shorts to receive that funding. That's a high funding rate. So you can see here how price declined, and we hit 8 o'clock exactly to the minute, and you got a big move to the up, well, relatively big move to the upside. But that is 100% no second thoughts about it. This was all because of the funding rate. Price was going down into the funding rate as it's attractive, okay, as it's meant to be. It's meant to make you want to open a short position. Okay, or it's meant to make you want to close out of your long position, because you are meant to either want to receive funding or not pay the funding. So, this is actually a brilliant example of that, if I'm honest, of price. People are attracted to open shorts, and hence they opened a short, they want to receive the funding, and people in longs are closing out of longs because they don't want to pay the funding. And then as soon the 1 minute after it's passed, you get an increase in price. 100%, no doubt about it. That was funding right there, because of the fact it happened to the minute. Definitely. So yes, there's a live example that happened 10 minutes ago for you all. So basically, yeah, the funding is used to make people want to close or open positions. Okay, obviously it doesn't always work, but that's what it's there to design to do. And obviously the two exchanges that BitMEX use are Bitstamp and Coinbase. That's why I always have the Coinbase. Oh no, you have Bitstamp here, sorry. So you can see the difference. So we can see that the spot exchange is trading at 10,352, and the leveraged exchange is trading at 10,365. So arbitrage, sorry if I pronounced that wrong, arbitrage traders can obviously make use of this. Essentially buy spot Bitcoin, send it to BitMEX, and sell for $10 profit. And if you're doing this with several hundred Bitcoin, for example, you can make profits buying it cheaper on a spot exchange, sending it to BitMEX and selling, for example. I'm not an arbitrage trader, so I would have never done that in my life. But obviously that's how, there's a big market for arbitrage. So people that, it's probably bots, if I'm honest. It's not actually people doing it, but the bots that are in there doing that, they're making they can make a lot of money off of that. But you have to be a bit skilled in making a bot, I suppose, in doing that. But nevertheless, there's opportunity if you want to do it. So yeah, positive funding means longs pay shorts, and negative funding means shorts pay longs. So you can see this is a really high funding rate, really positive funding rate. So positive funding rate means longs pay shorts. Okay, so that funding rate that we got on BitMEX. Sorry that I have to keep on loading this up in private mode, but yeah, so this positive funding rate here, you can see that means longs are going to be paying shorts again in 8 hours. Okay, so that's what that means. The color, by the way, will change. So if I was in a short position right now, that color would be green, because then that would just highlight to you very easily that I'm be receiving it. And if I was in a long position, then the color is red. If you're in no position, then it just means positive is red, negative is green. But that will change color, by the way, depending on the position. So if I opened a long right now, it would remain red, because I'd be paying. But if I opened a short position, that number would be green, because it would mean I'm receiving that funding. And don't get me wrong, if you're in large positions, the funding is sometimes you can be paying hundreds of dollars every 8 hours if you wish to maintain your positions open on BitMEX, leveraged. Okay, obviously the futures exchange, you don't have that, okay, because there's no expiration. But obviously the futures is in extreme contango, and contango basically means that the futures price is trading extremely. There's a big difference, okay? We're trading at nearly 11,000, and obviously the perpetual swaps or the spot prices. So what's that? Almost coming on $600 difference. Okay, between the standard spot price and the futures contracts for June. So that's like extreme contango, really is. So that's pretty interesting, but that's probably for another video. But yeah, it's kind of crazy that, but nevertheless, that can also affect the funding price, okay, because of this, extreme contango that you are seeing on that futures, which is really, really, really crazy. But yeah, so you can close out, just as that example that I've shown you there on Bitcoin, you can close out your position like literally 1 minute before, and you will not have to pay funding, okay? So that's why you will see people closing out their positions, especially when it's extreme like this. You will see people closing out just prior, okay, and then maybe opening up a minute afterwards, so they don't pay the funding, because that's more than the fees required, okay? So yeah, sorry, I just need to take a drink. Or my throat is feeling a little bit, if I'm honest. Okay. So yeah, if price is going down and funding is increasing, you can use this knowledge to see that it's likely longs opening and that it is a crowded trade. A good example, I had just so many examples from the 10K triangle, and this is again where context is really important. Okay, so let me explain the context of these two. Okay, I want to go through that now a second. So when we go back to this descending triangle here, what we can say is price was downtrending in the form of lower highs on a flat base. Again, we know Bitcoin likes these descending triangles. I mean, we just think back to here. When you just think of like patterns of how it's played out in the past, I guess we can take it like this better. Okay, what it played out in the past, as you all know, this was a descending triangle. Descending triangle. Let me just load up this because I just love giving you all examples. Let's hide all that. So let's come out. So descending triangle, and what did that lead into? That led into a bump and run pattern, which gave you an increase in price. What did you have again? You had a descending triangle that led into a bump and run pattern that led to an increase in price. It's literally the same thing twice. Descending triangle, bump and run, or the inverse head and shoulders, and you're off to the races. What happened? Descending triangle, fall down in price, inverse head and shoulders, you're off to the races. So exactly the same. It's kind of crazy how that was, but nevertheless, back to funding and open interest. What you could see here, okay, the reason why the funding now is expensive, okay, so the funding is a premium, okay, so it is positive. But while price is going up, traders are going to be not so swayed to close out positions. But while price is going down, okay, so here you could open up a long. Let's say you opened up a long at 8,000. You're more than happy to keep your long open and pay funding while price is increasing in an exponential rate. But if you opened up a long, let's say at 12,000, and price is down at 10,000, you're not going to be so inclined to pay extreme funding rates, because on top of losing money holding longs, you are also paying funding. Doesn't really make sense, does it? Like, it doesn't really make sense in that regards, because you're paying to keep open a losing position, whereas here you're paying to keep open a winning position. You're going to be much more inclined to pay the fees and because of the amount of money you're making. Whereas here in this triangle, and it actually got extreme in this area here. This is where it got extreme. So it was right at the end of the triangle basically, and yeah, you did get extreme funding here, and obviously with the same, a few within the coming days you broke outside of the triangle before retesting. But yeah, this is where it got extreme. Okay, and that's where context is important. So yeah, the funding is similar to here to what is here, but this funding was off of the back of a downtrend. This funding is on the back of an uptrend. People are going to be much more inclined to pay funding here than they are here. Hence why you can flush out. It's really forced people out of positions. Whereas now people are not going to be so easily forced out of positions because you're in a really nice uptrend. So it doesn't really matter about paying funding. And so yeah, that was where I wanted to go over context. That was it. That was where I wanted to cover the context, like the difference of how price was then to how price was now. There was one other example that I wanted to give you, and I've kind of forgetting what now I was going to say. I can't actually remember. Oh yeah, I was going to say like what I class as extreme funding rates. So for me, like normal would be 0.01. Okay, so 0.01 plus or negative is totally normal. Okay, that's just normal. 0.01. After you go above 0.02 is where it starts becoming a little bit weighted to one side, okay, but it's nothing to force out a position. Really, if it starts going above 0.04, okay, so that this is now where it's becoming a little bit extreme. You could feel the pressure to want to close out a position. And as soon as it goes to 0.1, that is, that's just totally extreme, massively high. Anything above 0.07 is going to be really massively high, because that's where you start. That's just where it's even bigger than the market fees. So, that's really extreme. Okay, really extreme is above 0.075. But really, that area between 0.2 and 0.75 is pretty high, but not enough to really force out a position. Just above 7.5 is extreme, and you would likely to see volatility going into that. Okay. All I would like to mention is that this funding, trading off of funding, even like 4 months ago, even at the lows, was nice. You had a really good advantage. Okay, but lately the funding has been coming less and less relevant. So obviously that example that we had 20 minutes ago was pretty nice, but it has become less relevant. Okay, you used to see really big moves. Okay, so really big moves as people aggressively sold going into funding and then bought it straight back up. You're not seeing those really massive moves anymore. So that's partly, I would say, because more people are catching on to funding. It's becoming a little bit less relevant, and also the demand is so high, people are just not closing out for the funding like they were a few months ago. So yeah, that's again, context being very important. So yeah, the next slide that I have about funding is, you can't trade off of it alone. It is a little bit naive, because essentially if you start trading off of the funding alone, you're kind of thinking that you can outsmart the market, outsmart or outplay the market. It's not as easy as, it's easier said than done. So, for instance, you could sell thinking that you're going to receive funding, and instead you'll see price increase going into the funding. It can trap a lot of traders. Okay, so obviously 20 minutes ago it was nice because price did decrease going into it, but imagine if you shorted and then 2 minutes before you saw an increase in price. Everybody that's just shorted, everybody that's just sold their longs or just got rid of their longs, they're currently then they have to chase the market. So you have to determine, is it worth trying to out trade the market? You just have to go off context. You have to have more factors than just funding, because you get caught off sides quite a lot of times if you just go for this alone, thinking to yourself, well, I want to receive funding money, because you could open a short and then price moves against you 1% and you've suddenly just lost 1% for a 0.1% gain. It's obviously not worth it, is it? So don't trade off of it alone. So yeah, one though can time entries using funding. And I also have a live trading video. So I do have a live trading video of me doing this trade. It was yesterday or the day before. People basically requested they would like to see me do like live trades. And obviously for me, it's a little bit difficult to, well, it's not really that difficult, I suppose, but it was, I just one that I recorded for you all. So I will upload that to the website. It's basically just me entering a trade, offered a funding period, okay, and I commentate on it for, I think the video lasts about 15 minutes. So I basically take a scalp trade off of the aggressive selling of the longs and the funding period, and within 15 minutes we saw a really nice increase in price. So it was a really nice scalp trade that I done, and I have the whole video recorded and I will upload it to the website for you all. So yeah, for like a nice live trading video, I have that recorded and I just need to put it on the website basically. But yeah, extreme funding requires context, and the Tensor charts again is a nice website in this regards, because you can see here, okay, you can see the history of what the funding rate is. Okay, so this yellow line is what the actual funding rate is, and then the green line is the predicted funding rate. So the predicted can change. Okay, so you can see we started at 0.07 and then it dropped all the way down to 0.03 and then it picked up to 0.48 basically, and you can see at this period at 8 o'clock is where the predicted ended, and that's where the new predicted started. Okay, so every 8 hours it's paid. If you weren't aware, you can see that the predicted, it will change and it locks in at every 8 hours. It changes, locks in at the new 8 hour period. Okay, and you can also see this. I just need to just really conscious of not showing my emails anymore. So basically you can see up here on the top right, okay, in the top right, you can see that in 7 hours 33 minutes, there's going to be a new funding payment, and it is going to be 0.46%. Okay, and it's currently predicted to be 0.59. So the only information you can take from this is that more people are long. Okay, so you would say that there are more people looking for longs, or more people taking longs than there are people taking shorts. So that is one metric that you can use, but again, it's not bearish because the trend is really, really up. But nevertheless, it's a metric that you can try and incorporate into your trading. But yeah, definitely don't short just because of high funding. I can see that I have a lot of questions here, so I am going to take some of these questions a second. Okay. Okay, so going back to the harmonic, yeah, so very good question by Paul, that I said in my harmonics they work best on the 4 hour plus. I did say they work best on the 4 hour plus. You're absolutely correct, but that said, harmonics do work across every time frame. The only reason why I recommended you to start off with a 4 hour plus is because you have a higher probability. But you know, I have traded and given like live examples of harmonics down on the 1 minute chart. So you know, you do get harmonic patterns on every single time frame. It's just that 4 hour plus is the time frame that is easier or recommended to at least begin harmonic trading. On the harmonics, if price exceeded 886 and for example went to 0.91, would it still be valid? I guess I would say yes, it would still be valid as long as it wasn't closing below that level. Okay, so if you wick onto 0.91 and back to 886, I would allow it. Okay, from wicks, it's fine. Wicks and quick, it's just you don't want to, you know, again, it kind of, it all comes down to really context. It's hard to have a line in the sand and say it's right, it's wrong. It really requires context. But I would say if it's come down steadily and you've hit the 886 and you've had a quick wick through and you're back up to 886, and yeah, I would class that as absolutely fine. But it does, you know, it's really context dependent, because sometimes I'd be like, no, that's not valid. Other times I'd be like, yeah, that's acceptable. So it's a little bit hard for me to just see a line in the sand, valid, not valid. So I'd need to like take each trade and say, you know, I feel this is good, I feel this is bad. But no, yeah, generally, yeah, it's going to be okay if it's a wick. Is open interest something you should take into account on higher time frames, like for swing trades? Yes, it's more relevant per se on higher term time frames. Just like I the way I like to describe technical analysis is everything is more relevant on the higher term time frames. So obviously I love scalping, I love being a day trader, but and obviously it's like a fractal in nature, so me trading on the 1 minute chart is what makes up your daily charts. You know, so you know, obviously it's everything's relevant across all time frames, everything works on all time frames, because me trading 1 minute is building your higher term time frame pictures. But yeah, generally speaking, yeah, open interest could be classed as more relevant, more reliable on the higher term time frames. But you can definitely use it for scalping as well. So you can use it for all time frames, but it's generally easier to manage and track on higher term time frame trades, so swing trades. I think we may have just had a funding dip and open interest dropped a bit on the decline. Could you have a look at that? I guess that was the example that we went through. So I may have answered your question already, but what we could have seen. Okay, so let's drop this down to the 1 minute chart. Yeah, so what a nice example we really did have there. So you can see here the open interest was declining. So actually it shows people closing out of their positions. So price was coming down. Open interest was actually declining. The volume was pretty dead. So yeah, I mean I was already in a long, so this is pretty nice. But nevertheless, yeah, this you know, if I was sort of trading live, then that would have been like a good opportunity, really, really good opportunity to buy again, because 1030, pretty sure that's the middle of my channel as well. Yeah, so we were reaching around the middle of that channel. So yeah, there's a lot of support at 10,330, and that was the lows. So that was where I first made that bid, and this was where it first swing forward that low, coming into that level 26. Obviously bottom there at $34 different, but yeah, this butterfly is looking better and looking nice. But again, we're still at the top of the channel, so at the end of the day, you know, if you are in a long, for example, again, not financial advice, do whatever you want. I'm not saying we can't just go up, but you know, I've already taken my first take profit, so I don't need to do it again. But nevertheless, this is a take profit because we could come back down to the bottom of the channel. But I would just say everything is looking. Yeah, Ethereum BTC is still moving up. This is like insane. Yeah, ETH is really, 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 really strong at the moment, which is really good. I'm long, but nevertheless, that's insanely strong. Yep. So next question. Hi Dan, how do you determine the open interest metrics? So you have to view them on a website. So for example, let's come up to the daily time frame. Okay, let's come up to the daily time frame and let's make the open interest here really big. Okay, so this is looking at the open interest on the daily. So we can know that price. We know that price has been increasing. So what can we see here? Open interest has been steadily increasing. Obviously, it's dropped a little bit now, but open interest has been increasing generally during the whole move up. Okay, so this whole move up has been backed by increase in open interest, and not just the increase in open interest, but also, okay, oops, didn't try and click that. Oops. You can also see the volume has generally been, over average. Okay, it has fallen off a little bit here, but what I like to refer to, so this is another website, but I like to refer to the delta. Okay, so what we can do here is come up to the daily time frame. Okay, and on the daily time frame, what we can see, okay, is it's generally been increasing on the way up. Generally, again, at these recent highs, it's not done it so well, but you can see from where the run started back in around the start of January. Okay, so our first move up was an 150 million delta. We then went to 179 million. We then hit that was the our best so far, but 300. Oh no. Second best, 347 million. So at the start here, we could say that the volume is really, really, really backing this exiting of the range. As you'll know, we were range bound from this high to this low for 45 days. We broke out of that range on really high delta. Okay, so we were breaking out of this range on really high positive delta. So the volume was confirming the break. Okay, what we then got was this pullback. Okay, so we broke the range on 347 million. We then got the pullback, okay, on, as you can see here, a decline in open interest on this particular candle of where the pullback began. And then when we were testing resistance as support, it was also on declining volume. Okay, but then the main thing that you can see is then when you next broke the next high and you start to move up here, what volume was really, really healthy. So this is 3 periods in a row. So 3 days in a row, you 191 million, 175 million, 165 million. Okay, so it's obviously extremely high positive delta 3 days in a row. So you had your 3 white soldiers, okay, where you had that 3 bullish days in a row. You then pull back again, and again the volume on the pullbacks is relatively low. So the relatively low volume on the pullbacks until you got this short squeeze. Okay, well, obviously aggressive selling at the lows, and this was again. You have to go back to Trading Light to see this, but it was really aggressive selling on the lows while you didn't break, so that you had really big CVD divergences here as gain, and then you broke up. You took the next high, 368 million. At market. So really positive delta again, an increase, the highest that we'd seen so far. So far you can see the open interest is really been increasing the whole way. The open interest has been increasing the whole way, and obviously that was the highest positive delta that we've had since the run began. So back on the 5th, okay, you can see this was a massively positive, healthy uptrend. Okay, then we obviously took our highs again where the volume was not as great. So you can see it almost halved, and that is why I was being a bit cautious. Was I right to do so? Yes, because we did get the pullback. Okay, so we did pull back into the old demand zone with, this is the thing, massively aggressive selling while still holding the lows while on a decrease in open interest. So guess what? You get the short squeeze 2 days later, okay, where you take off 321 million at market. Okay, so this is still a healthy amount. This is a nice amount. Obviously, it's a little bit less, but nevertheless, it's a good healthy amount. And now that brings us to top of the range. It looks like we are rejecting from the top of that range. So look how perfect is it? Literally we've rejected from it to close to the dollar again, as we have many times. So yeah, this range is lovely, by the way. But yeah, so that's how you can monitor and look at these statistics. Apologies that it's on a few different websites, but I like ExoCharts and Trading Light. I feel they're both really nice websites. So yeah, on ExoCharts, what you'd have to do is, you can use it yourself and it just, for example, what we would have noticed yesterday. Oh, please don't tell me it's going to. Sorry, I'm. Oh, here we go. Yeah. So what you could have seen yesterday was you saw on the initial drop 100 million, 123 million, 35 million, 73 million, 17 million. So aggressive selling on the lows. It just is so much nicer when you look at a period of, this is the cumulative volume delta. So it like adds up the periods of delta basically, and this has got no session breaks, hence why it's pretty good, because on trading view you have session breaks, so the CVD resets every session or every day period, whereas it doesn't on trading view light, a trading light. So this is better really for looking at divergences. And what you can see here is this made a rounded bottom, but this was making new lows, okay, which is your bullish divergences. Oh, sorry, I was even looking at the wrong bit. This is on the daily chart, but you saw it here as well. I actually wanted to point to you at the example of yesterday, and this is where it's very prominent. You can see here rounded bottom and really aggressive selling. So you actually had it on the lows down there, but I wanted to give you this example. But yeah, there we go. I have to refer. I can't start taking random questions because I can't just do that as a rule. So for this example is you're gonna have to refer to the live stream that I made on Fibonacci expansion. But generally, to refer it back to open interest, if a coin's at all-time highs, so if something's making all-time highs, you want open interest to be at all-time highs as well. Okay, so to link it to this particular lesson to help you out. If you're, let's say for example Tezos, okay, well you can't actually track it, but let's say if Bitcoin's making all-time highs, okay, if Bitcoin's making all-time highs, you want to see the open interest on Bitcoin at all-time highs as well, okay. And you can use a lot of factors for confluence. Oh, so open interest is not free. Oh, yeah, right. So this is paid. Sorry, I'm not really too sure, but apparently you have to pay to get this. But yeah, you can see this on other websites, so you can see this for free. There's no requirement to pay for this website, to be honest. You can definitely get this information for free, just on BitMEX itself. I am going to go over CVD and delta and volume 100%. I have got all of that planned, don't worry. I'm going to start the volume at the start of March, so at the end of basically the end of this month, well, the start of next month is when I'm going to start a volume course where I've got all the volume plans, so CVD will be covered. Why don't I trade on Bybit? Just because I love BitMEX. Period. I love BitMEX. Cool. Thank you, Igor. Yeah, no worries. I will be uploading that. Yeah, ETH is now on fire. Yeah, those websites I've shared with the group many times. So Tensor charts, XO charts, and Trading Light. I've shared these definitely. Trading Light you might have trouble getting on because I think it's like invite only or pay. I'm not too sure. I just paid for it, but yeah, I can't remember. Maybe you have to get invited to this still because it's like on beta, so I'm not sure if everyone can just freely have access to it. But yeah, cool. So does anybody have any other questions? Any other questions in regards to open interest or funding? Please let me know if you do, and I will gladly answer the questions. In terms of Bitcoin, I mean, I think you can all understand what I'm looking for. I'm looking for this butterfly. But in the midterm, I'm expecting this to be exceeded, and I'm still expecting 11k. But 10,700 is a bit of a resist. Well, 10,500 obviously is where we hit here. That's your psychological level. It's not massive, so I'm looking for 10,700, 10,750 next, but ultimately then to 11k. So yeah, I remain bullish on Bitcoin. And yeah, my only position that I'm in at the moment is from trading this, so I'm still long. Hit take profit 1, and I'd like to close the rest of it. Well, the target for this is again from around 10,580 to really up to around 10,700. You could push. yeah, maybe a bit before 10680, really. But yeah, 10600, 10680 is where you're looking for this to complete, where then you could look for this to retrace back down to the 0.5 to get you that again. So what is this? It's the well, this is obviously the not for the back of a shark, but nevertheless, you can use the same sort of idea. Okay, you could be looking down towards, I mean, obviously each pattern has its own way of trading, but I think the most sensible thing to do is just look for the resistance support flip as a first target. So I mean, I wouldn't short this. I must be honest, I wouldn't short this, but I would use it as a take profit. Okay, I would use that as a take profit, but I definitely wouldn't short that. But you know, nevertheless, if you got the opportunity to compound off of the resistance flip, okay, maybe back into the range flip, then yeah, you look to long those retraces, obviously. But I would trade this, the you know, the completion of the pattern, not for a short, but I would look to long the retrace of what the target is. So I hope that makes sense. But yeah, currently you obviously are finding a bit of resistance around the top of this range. So, you know, one level at a time sort of thing. If you can't close above this, then you're not going to get up there. Not really sure why funding exists. So funding exists because so you have to think that there's no expiration dates on BitMEX. Okay, so BitMEX contracts are futures contracts with no expiration date. Okay, so they're perpetual swaps. So you have to imagine that the price of BitMEX is linked to Bitstamp and Coinbase. Okay, so if I load this up, BitMEX, because they kind of explain it on their website. I mean, I will openly say, like, for BitMEX, I wouldn't say I'm some sort of like expert per se, but you know, they get their spot prices, as long as it hasn't changed since the last time I read this. I can't remember offhand where I even find it, but basically they get, I'm pretty certain they get their you know, index prices from Bitstamp and Coinbase. I can't remember where you find it out in here. You're just going to have to trust me, unless it's changed recently. That's what it was the last time I checked. And so they get their prices off of Coinbase and Bitstamp, okay? And if, you know, Coinbase is trading at a lower price, okay, so if Coinbase is trading cheaper than the perpetual swap, then they are going to try and influence traders to bring price back to the spot price. Okay, so you just have to think it like this in simpleton's terms. They want the price of the contract that they are essentially trading at, they want to bring it as close as the spot price as possible, because that's where the price is sort of based off of. So when you look at mark price, okay, so you know when you enter a position, okay, you know when you enter a position, and it will tell you, yeah, mark price. So it will say entry price and mark price. Mark price is going to be the, you know, the oracles, so the Coinbase and Bitstamp price. So if you're, you know, the mark price of the exchange where it's tracked from, if you're trading at a higher or extreme price than where the spot price is, they are just going to try and influence traders to bring price back down to that. Okay, so the way that it sort of works is that this very, very simply, we are trading at a premium right now. So if you look at Coinbase, price is going to be lower than this, and this funding is introduced to basically try and influence people to sell or close their longs to bring it back in conjunction or in line with the spot price. And if the spot price was trading at the same price as this, as on BitMEX, then the funding is not going to be as extreme, okay, if there's even a funding difference. Okay, so you might come back to like a standard 0.01. Okay, so basically there's just an interest to bring it on level with the spot price. Okay, also you can get like extreme contango with the futures. You know, this extreme price on the futures is also going to have an influence on this, but nevertheless, just think of it very simply with the spot price and spot price. So just Coinbase too. I mean, you don't need to like look at this, like you could know straight away. This is going to fluctuate, by the way. This is definitely going to fluctuate. So you can see that the fluctuations there. There's now currently $11 difference. So with this difference, even more. So with this difference, you know, this is clearly trading at a premium. They're going to try and get rid of that premium by increasing the funding rate to try and bring it back down, okay, or influence, you know, attempt to influence traders to close out longs, open shorts, to bring price back in level with the spot price, which is where the contracts are based off of. Okay, so that's the mark price. So that's why funding exists, basically. And, you know, obviously, you know, generally speaking, futures do trade at a premium. So obviously the reverse they generally do trade at a premium, especially in Bitcoin, because I guess people expect the future price. Well, obviously we're in a bull market, so it's expected the future price is expected to be higher. Generally you would take into, if you're like trading US oil, you would take into the cost of carry, the cost of storage, etc., 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 and that's why you can get premiums in those markets. In this market, it's obviously just high speculation which drives this market, and it's great. Cool, so I think that is it. Does any other questions? I'll stay for a few more minutes, and then if no one has any other questions, I will call it a night. So one question from Menkiz is sent a picture. Open interest decreasing on increasing price. Open interest decreasing. Yeah, so you are correct. So here, what we can see is this is liquidations. So you can see the liquidations that are happening here. This is the rect indicator, I suppose. So you could say that this move up that we've just seen, 10.154. This is in the past. This must be in the past. But yeah, so yeah, here we saw price move up, and the open interest fell down, and yeah, this is correct. We did pull back. So this is where I'm a little bit confused, because I didn't realize you could use the replay tool on this website. But I guess maybe you took this print screen a while ago, I suppose. But yeah, I think this is where, I'm pretty sure this is the price, and then we obviously reverse back down to here before going back up to where we are now. So yeah, you're absolutely correct for highlighting this. This is obviously liquidations. That's shown by the open interest declining. So price moved up on really liquidations, or people closing out of positions rather than new longs opening. And obviously the volume was lesser than what it had been in the past. Okay, so the volume was also not as great, and you did pull back from that. So yeah, that's correct. This picture that you've took is like correct. No, I cannot take a look at Tezos. Sorry, I'm not going to take a look at Tezos. Not to be mean, but I'm not going to take a look at it on stream. I'll happily take a look at it after the stream, maybe this evening. But I refuse ever to take requests, basically. So yeah, there we go. Hope that you've all enjoyed the stream, and that's nothing personal, by the way. It's just like, yeah, I refuse to do it, period, for everybody. So yeah, there we all go. I hope that you've enjoyed the stream, you've learned something from it. I know this is probably a thing that you're gonna have to practice. Okay, so it's all well and good me saying it on stream, but then you're gonna need to obviously practice with it and test it out, see, and then that's when the questions will arrive. So that's where feel free to absolutely send me your questions in the chat in a few days if a question might pop up. But if you don't have any questions, then I presume that it was all explained well. I think I could do like a part 2 on open interest, and I am very much I might do a part 2 on open interest. Not going to be next week, but I might do a part 2 on open interest in a few weeks time, because there's more to open interest. But yeah, I think I might do a part 2 on that. But funding, I feel I've explained it all. Funding is nothing major. But yeah, if you do have any questions, then you'll have to absolutely just send me a message, and I will help you with those questions. Cool. Yeah, I'm glad you understand. Nothing personal, but yeah, obviously if I take a look at Tezos, and I have to take a look at every other coin that's requested, and I would never end. So yeah, I'm not. That's the only reason why. But yeah, I'll take a look at it on the Champions live stream for sure, because I'm trading Tezos. So basically, Tezos is all-time highs. It's really good. It's been good for a few days now. But yeah, there we go. Thanks everybody for watching. Any questions, send them across to me. But yeah, hopefully you've enjoyed. Thank you once again, and I will catch you in next week's stream, which is obviously going to be the 19th. Or if you're a champion, I'll catch you on Sunday the 16th. So yeah, cheers once again. Thank you, and have a brilliant evening. Thanks. Bye.